The global economic slowdown. Growth downgrade to 2.3%. The global economy is entering a period of pronounced weakness. According to the World Bank, global growth is projected to slow to 2.3% in 2025, a sharp downgrade that marks the slowest pace since 2008, outside of an outright recession. This slowdown is not driven by a single factor, but by a confluence of rising trade barriers, unprecedented policy uncertainty, and mounting geopolitical friction that is rewriting the rules of global commerce. This video examines the core reasons behind the downgrade and its severe impact on emerging markets. Chapter 1. The Trade Barrier Crisis. Single largest contributor to the global growth downgrade is the sharp rise in trade protectionism. New global trade restrictions in 2024 were 5 times the 2010-2019 average, and high tariffs are now clouding the economic outlook in nearly 70% of all economies. This escalating trade fragmentation raises costs, disrupts cross-border supply chains, and creates a crippling level of policy uncertainty that discourages the long-term business investment needed for sustained growth. Chapter 2. The pressure on developing economies. Slowing global environment disproportionately harms emerging market and developing economies, EMDEs. Growth forecasts for all EMDE regions have been downgraded for 2025. While these countries account for nearly half of global GDP, their per capita income growth is projected to be nearly half a percentage point lower than that of wealthy economies, further widening the rich-poor gap and exacerbating extreme poverty, particularly in regions afflicted by conflict. Chapter 3. Regional trade exposure. East Asia and South Asia regions, with high trade openness, are feeling the impact most acutely. In the East Asia and Pacific region, growth is projected to slow to 4.5% in 2025, with exports being curtailed as the impact of higher tariffs is felt. Similarly, countries like India, despite a revised domestic GDP forecast, face significant headwinds, with the ADB citing the effects of steep U.S. tariffs on Indian exports as a key downward pressure on its growth outlook. Chapter 4. The Climate and Conflict. Multiplier beyond trade. The outlook is weighed down by persistent non-economic risks. The World Bank explicitly lists worsening conflicts, extreme weather events, and persistent inflation as major downside risks to the 2025 forecast. In low-income countries, the combined effects of climate shocks and conflict are reversing agricultural recovery efforts and threatening the progress made toward reducing extreme poverty. Chapter 5. The Need for Cooperation and Reform. Current trajectory points to the weakest decade of global growth since the 1960s. Analysts stress that a potential upside rests entirely on a reversal of protectionist measures. Policymakers must focus on strengthening structural reforms, reinvigorating business investment, and, critically, engaging in multilateral cooperation to ease trade tensions. Without renewed global dialogue, the possibility of intensified trade restrictions poses the most pressing and devastating risk. Conclusion. The 2.3% growth forecast for 2025 is a global warning sign. The rising tide of protectionism is not just an economic policy choice. It is a structural force actively undermining long-term global prosperity and development. The solution demands a collective move toward transparency, cooperation, and policy stability to weather the current storm. If you enjoyed this deep dive, follow and subscribe the channel for more videos like this.